Hey guys, welcome back to the channel. In today's video, we're going to be going over the types of candlesticks that I use on the Thinkorswim platform. If you have not seen our video on indicators that we use, I'd highly recommend that you check that out, which is in the link in the description below, and get familiar with the types of indicators that you see on the screen here. And it also gives you some of the verbiage that I'm going to be using in today's video. So let's go ahead and dive right into it. If you're looking at the charts here, what you see are candlesticks, and basically what these candlesticks are representing are price action over a certain time period. So right now I'm on the 180-day time period in a 4-hour time frame. Every time period and time frame is going to look a little bit different. You have the 1-hour time period based over 180 days. You have the 20-day 1 hour. You have the 1 day 1 minute. So they're all going to look a little bit different based on their time frame. Problem with this here, in my opinion, is the charts look a little bit busy whenever I look at these types of candlesticks. So I use what's called the Heiken Ashi candlestick pattern, and I wanted to show you the basic candlestick pattern here, and I'm going to change it over to the Heiken Ashi, and I want to show you the difference of how cleaner it looks. So the way that you do that is you go to chart settings, go to appearance, go to chart type, and you change it to Heiken Ashi. I'm going to move my chart setting bar over here, that way you can see the screen better. And I want you to take a look at this here and see how much more clean it looks once I hit apply and OK. Now you notice that the uptrends and the downtrends are so much more cleaner. So if you're a swing trader, basically if you're getting into a stock for a certain period of time, trying to flip it for a profit, then you can make a little bit better decision as far as, is it time to sell, is it time, or should I still hold it? As you can see, on an uptrend we have nothing but green. On a downtrend, for the most part, you're going to have nothing but red. And then if you notice, on every reversal that I have, we notice what's called a doji candle, where we have a small body and a wick at the top and the bottom. So if you notice, we're in a downtrend here. We get a doji candle with a buy signal. We ride all the way up. Doji candle with a sell signal all the way down. Doji candle, here's our buy signal, all the way back up. Okay? And what you can notice also about these candles, on an uptrend, our Heiken Ashi candles show you where the price starts off from the bottom of that body. It rides up all the way to the top of the wick. This is the highest that the price has reached within that 4-hour time period, and it shows that it actually closed at 22.51. So all of the uptrend candles, for the most part, it may not be every single one, but for the most part, are going to have a big body and a wick at the top. For the downtrends, you're going to have the opposites. You'll have a red candle, big body, wick at the bottom, big body, wick at the bottom, big body, wick at the bottom. Again, on your doji candles, it's giving me a heads up saying, hey, there's a potential for a reversal coming. It's not always guaranteed because things can change, but it's giving me a heads up of, you need to keep an eye on this because we could see some downside coming, or hey, this might be a good entry point. We may be coming up to the back to the upside. And the way that I really make my decision on that is, I see the doji candle. As you can see here, we have a red doji candle here that's coming up. I'm going to look at my RSI, and I notice that this stock was close to overbought, and so that was pretty high up. And I'm looking at the MACD, which is favoring that it's going to cross over to red soon. Okay, and my lines are looking like they want to go towards each other, and I notice that my green bars down here are getting smaller and losing steam. So it's something to keep an eye on, right? If I get a sell signal on top of this doji candle, or if I get another candle right here with a sell signal, then chances are this line's going to get closer together or potentially cross, and it's basically going to tell me that I'm going to see, a little sell-off. I'm going to have a pullback, and then it makes me more aware of if I want to re-enter this stock then now I need to pay attention to it, because over the next several hours, I might be able to find a good entry point. Okay. Same thing over here. You see your doji candle. You see that the MACD was about to cross the green. You get a buy signal. And so it's something to keep an eye on. However, I wouldn't have necessarily entered right here because I'm still technically in the red. It wasn't until my candle closed above my exponential moving average that the MACD crossed over. Okay, so if you remember the last video, we talked about anything above that exponential moving average shows a good sign of price strength. Anything below doesn't necessarily show a very good price trend. So you want to just be patient and make sure that you confirm that we are going to see some upside on that particular stock. Okay. So that is, in a nutshell, why I use the Heiken Ashi candles and how I use them. Again, they're just a lot more clean. They are, to me, a lot easier to read once you kind of get familiar with identifying a potential entry exit point on the reversals. And again, I don't just use the candlesticks. I use every indicator to help me make an educated decision on when I should get in or when I should get out. So again, if you found value in the video, hit the like button. Don't forget to subscribe, hit the notification bell. Other than that, guys, we'll see you in the next video.